Taiwanese index down 0.1%. We have Hang Seng sitting with cuts of 0.5%.
They have determined that the characteristics of certain investors have sufficient uncertainty that they should no longer be designated at free float pursuant to our methodology.
Q3 to Q2 performance has certainly improved in the upstream business and the downstream.
The Nifty is down about 45 points.
Overweight stance on IT sector as of now. It will be a bit of an underweight or a neutral at this point of time.
This year's budget has indeed laid the foundation for India's emergence as a developed nation.
We're still down on the benchmark index. The Nifty is down 36 points. Around that 17,850 mark.
मैं देश विदेश से यूपी आने वाले आप सभी इन्वेस्टर्स का अभिनंदन करता हूं, स्वागत करता हूं.
The markets, we've slipped from the day's high. We're currently down 0.4% on the benchmark index. That was the day so far. Hello and welcome to Closing Bell live from the Motilal Oswal studio. I'm Reema Tendulkar. With me today is Nigel in the studio, and we've got Mangalam Malu with us in the newsroom. Hi, Mangalam and Nigel. Another quiet day, right? Yeah. Very ranged, very sideways. In fact, the Nifty today has just moved in about a 70 to 80 point trading range. Pull up the Nifty intraday high and pull up the Nifty intraday low, and you would see the high and the low is less than what we had. The range is less than what we had in yesterday's trading session. So the low today is higher than the low of yesterday, and the high today is lower than the high of yesterday, right? So we've moved in a very tight band. Within that, we've seen a fair amount of gyration in the last 15 minutes. The Nifty is trying to push higher, perhaps get back to the day's high. But the week belonged to the broader markets. This week, the mid-cap index has outperformed the Nifty by close to about 2.5%. So while the frontline indices were consolidating and trading range, the momentum was in the broader markets. And today as well, you are seeing that outperformance. So the mid-cap index today is up close to about 0.25%, outperforming the benchmark indices by nearly 0.5%. Let's quickly run you through some of the big gainers today. You've got Tata Motors, a big up move in the second half of the trading session. Hero MotoCorp giving it company in the PSU banking space. Big boy, State Bank of India is higher in trade. On the losing side, HCL Tech is one of the top Nifty losers. That's down nearly 3%. There is an MSCI weightage cut. There will be outflows. The street was taken by surprise over there. Hindalco moved higher yesterday, but today it's come in for some amount of selling pressure. And Tata Steel, Nigel, it's down 10% this week, right? Steadily, it's given up a lot of ground this week. Just watch for the IT names, because IT has seen a lot of buying come through at the lower levels, particularly mid-cap names. So Persistent, KPIT Technology. In fact, in 2023 so far, these are stocks which have given you returns of 20 to 25% so far. So it's a big comeback trade for mid-cap IT after the badgering that they got last year. What are you watching?
Well, that's right. Reema, just one point about this week. We have ended more or less flattish, but we've at least outperformed the globe, after a while. Year to date, we're still underperformers, but in this week, we've either performed in line with the Shanghai market, or we have outperformed what the US markets have done. So that's heartening as well. In terms of Tata Steel, the problem is there's no visibility for the next few quarters. Europe was a loss, and they're saying the next few quarters as well is going to be a loss. On the India business, the guidance is they're only going to improve by around 2,000 rupees per ton. And the big play on Tata Steel is deleveraging. If the operations are going to be weak, then there's not going to be any deleveraging. So that explains why that stock has come in for a harder knock from around the 123, 124 odd. It's come down to around 108. Focusing on the markets though, earlier today we were making this point that the 17,800 put is getting written, and that's what's giving the bull some bit of a hope. So earlier today we dipped lower, but those dips are getting bought into. Until we see writing at around that 17,800 odd mark, I think instead of looking at lower levels of 17,750 odd level, that's the near-term support. So if you're long, that's where your stop loss gets taken out. So keep that in mind. On the upside though, the 17,900 call, well, that's seeing a fair bit of writing as well. Even in today's trading session, it's added more than 40 lakh shares. The premium out there is around 70 rupees. So I'm saying on the upside, the 17,950 level, that'll be a bit of a resistance level. And let's pull up two key levels. One is the 20 DMA. You like to end above this level, on a closing basis, and the 100 DMA. If you get past the 20, then you want to get past the 100 DMA. And if that happens, then maybe in fact, we'll start moving higher as well. So that's what the optimistic move from the bullish point of view, 17,950, the crucial resistance. Mangalam, we've just got 60 minutes before you move into the weekend. I'm sure you've got some plans. Tell us what else you are tracking.
Well, I have no plans for the weekend this time around, Nigel. But a couple of things.
There was masti written all over all over that face, Mangalam.
Well, what can I say? But anyway, look, let's move back to the market because 60 minutes is what we have still with us. We were talking about a lot of options, etc. I was just looking at the 17,800 straddle, and those who are betting for the range that Reema's talking about, it's a narrow range, etc. The 17,800 call and put together premium of almost 200 points, and that takes you to the broader range in which the Nifty has been trading, 17,600 at the lower level to about 18,000 on the way up. But that's as far as the frontline index is concerned. Right now, I'm just looking at some flashes coming in from Bloomberg saying that Russia plans to cut March oil output by 5 lakh barrels per day. We don't know how much this would impact the markets on a whole in terms of demand and supply, but that's had its bearing on the way crude has spiked. In fact, Brent is now close to around $87, a big spike of almost $2 in just the last few minutes, and a 2.5% gain is what we're seeing out there. Will that have an impact on a couple of these players is something that we'll be watching out for in the near term. At least watch out for all the paint stocks, etc. And on the way up, a couple of these upstream names should come up for you, ONGC as well as Oil India. We'll just monitor whether there is a move on these counters as well or not. But then again, it's a move that we've seen very sporadic. So let's see whether the other stocks follow or not. Back to you guys in the studio.
All right, thanks for that, Mangalam. Well, let's tell our viewers what we have lined up on the show. First up, we'll be focusing on stocks like Pharma, Lupin, Voltas and United Breweries, which are reacting to their Q3 earnings. We'll also be joined by market expert Prakash Diwan and Dipan Mehta. They'll be joining in to give us some fundamental stock analysis. Later on, our Alpha Manager of the day will be Charandeep Singh as well as Varun Daga of Girit Capital. We'll find out what they're bullish on and how they have churned their portfolio as well.
How should you position yourself in the last 1 hour of trade? Mitesh Thakkar of earningswave.com joins in as always. Mitesh, your thoughts on the day so far, the week that has been, and the trades that you would recommend for the last 1 hour?
See, on the market, index, basically we've been calling that the market will remain range bound and we don't have a directional bias in it. And I think we practically, that kind of movement is playing out. Yesterday was a slightly positive day. Today was a slightly negative day. Net, we haven't gone much. We've traveled mildly within this range. So 18,000, 17,000, 750, I think these are the two counters which I'm watching. This 250 range looks like might be in force for the next couple of days. On the stock side, though, I think we have more of long calls. That's what we've been doing for the last few days. Day before yesterday, we had some good traction on the gas stocks, and today I think we are seeing follow through. So MGL is what I would recommend as a buy call. Keep a stop below 885 here. Look for targets of around 940 on the upside. And the other one is Navin Fluorine, which is giving signals of completing a correction and moving up now. So that's a buy with the stock below levels of 42.75. And look for target of around 44.90 on the upside.
Okay, all right. Thanks for that, Mitesh. Well, just keep an eye out on a couple of stocks actually from the broader markets, particularly from the the F&O pack. NCC has moved to the high point of the day, so I think that stock should come up for you on the screen. And on the flip side, Adani Enterprises, that one suddenly has moved a little bit lower, I think, in the last few minutes. So keep an eye out on that one. Adani Enterprises, let's get the intraday up. And even Dixon, that was holding in the green. Remember, the street has been quite cautious because they've gone on missing their guidance. The hope is that in FY24 will be a far better year. From the high point of the day, it's come off close to around 2%. Well, let's focus on a couple of stocks that are gaining. Pharma is reacting to its numbers and gaining in trade today. After the company's Q3 sales came in better than expectations, even though the margins contracted a little bit. Ekta joins us to run us through a quick analysis on that one. Ekta?
Thanks for that. Well, yes, a good performance which has come in for Aurobindo. Revenue was up around 6.7%. The street was estimating a flat performance this time in terms of revenue. Margins also close to around 15%. Street was anticipating 16%, and it is a Q-on-Q improvement. Also, profit at around 491 odd crores. US revenue improved on a sequential basis, so that was a positive. The board is going to be transferring its API non-antibiotic division via slump sale. So that is something that the street will be looking out for. And separately, remember that a couple of important takeaways from the management is that the Articles of Association was modified to factor in buyback provisions. Pricing pressure has been better as per the company, even when it comes to logistics and freight costs. Injectable revenue, they expect a growth on a Q-on-Q basis in FY24 when it comes to injectable sales. And there has been no regulatory issues in their formulation facilities. So all in all, commentary is positive. Possibility of a buyback is really keeping the stock afloat.
Okay, Ekta, what about Lupin? In the morning, you were telling us the numbers are not great, but they're not that bad. But the stock has slipped close to about 5%. What is it that you've picked up? And you had a conversation with the management too.
Well, yes, it seems as though the street was expecting more, and that's probably what didn't play out for Lupin. So US sales were $177 million, which was below expectations of $187 to $190 million. This came on the back of the fact that there was a strong flu season in the US, plus Suprep generic, which is a bowel drug, actually did not, was one of the key contributors or was expected to be. Now, US sales, according to most analysts, were higher on the back of these two factors, and hence it should have probably come in at over $185 to $190 million. Now, margins were above 12%, but some line items saw a rise on a year-on-year basis, which is a bit concerning. So, for example, the other expenses were up around 16-odd%. The company's cost of material expenses rose around close to 8-odd% on a year-on-year basis, and they have also cut down their R&D expenditure. So in a quarter where the US business was expected to do well, the margin should have probably improved much more. That is something that we saw with Alchem, which has released its numbers. So maybe that trend was expected to play out with Lupin as well. India growth in single digits for the second consecutive quarter. Next port of call would be the US sales. They have mentioned that it should be probably around 170 million going forward. And the Spiriva generic, which is an inhaler drug, the launch of that particular drug, which is expected in the next couple of months. So that would be something that the street would watch very closely.
As you would know, first quarter results were a bit of a surprise. It was about 125. Q2, we actually saw it rise to about $157 million. This quarter, it is $177 million, whilst the same time previous year was about 201. So obviously, it is there has been price erosion of a high kind. Essentially, you found price erosion in products like albuterol, Brovana, and famotidine. In the course of this quarter, we actually launched about 4 products. Altogether, all of the new products brought in about $20 million. So if you subtract 20 from the 177, we're talking about price erosion of a pretty high kind in the rest, so to speak. So that's where we are. Price erosion does continue in America. In this quarter particularly, so you saw we were stymied a little by, in fact, the loss of exclusivity when it comes to India. So in certain products, for example, the Ondero, for example, there was price erosion because it went out of exclusivity, and that's the reason. For example, we had an impact insofar as the turnover for India itself is concerned. We also had a slight impact because of NLEM, the expanding list. But for sure, insofar as expenses are concerned, there is a lot of focus on that. We did speak about various initiatives that we are carrying on, which includes, for example, reduction of manpower at the factory level, R&D level, and the like, the footprint reduction. Looking at a host of initiatives on freight, on failure to supply, and other inefficiencies that there were in the system. A lot of it has actually been addressed.
All right, so that was the management of Lupin detailing their numbers, indicating that there is some sort of price pressure in the US as well. We have Prakash Diwan with us. Prakash, Ekta spoke about the pharmaceutical numbers. Just wanted your thoughts on between Lupin and Oro. What do you make of the numbers, and what would you back right now?
Good afternoon, Mangalam. So, distinctly the pharma cycle of belt tightening, pricing pressure, raw material costs, demand contraction is probably yet to kind of trough out. That's what Lupin numbers very clearly tell you, because they are more meaningful from a geographical footprint as well. Oro has its own share of problems and revival and all of that, which is kind of underway. So I won't read too much into these numbers to crystallize a narrative on that. But it's an avoid at this point in time. But what's interesting, Mangalam, is out of the pack, if you see the kind of numbers that Cipla had, shared, the earnings which you saw in this quarter, the quarter gone by, that very clearly tells you that businesses which have invested in the last couple of years in newer geographies and newer products is what's kind of starting to reap benefits apart from just the US. So the non-US markets dominance is also kind of very positive for some of these names. And supply is, I think, one of the most resilient, though boring stocks to go for within the pharma space. So if the sector revives itself, there's no reason why this would not be a market performer along with that.
Okay, all right. Hi, Prakash. Good afternoon. Hope you're feeling better as well today. And, by this weekend, hopefully you'll be back to 100%. But, Prakash, let's move away from this medical and pharma space. What about Dixon? Used to be a darling, right, of the market. Then the numbers started disappointing. The guidance kept getting revised. And, I've noticed in this result season, whether it was Piramal Pharma, whether it was Dixon, some of them spoke to media, spoke to press, as late as December. And you should have given some bit of a heads up that Q3 is going to be a washout. Then maybe the markets would be a little bit kinder to you. But both of them have seen a sharp correction. Your view on Dixon in particular, because that used to be a darling.
Good afternoon, Nigel. So, actually, thanks for checking on me. Yeah, things are much better. When I was hoping you ask about what's the plan for the weekend on the United Breweries numbers.
Yeah, Prakash, that's what I was wondering this morning when my colleague Surbi joined in and she said that it was a disappointing set of numbers. I was shell-shocked. I didn't know what to say. I said, we haven't done a bit. But I said, I'll keep it a little bit sober. Go ahead, Prakash.
Yeah, so on the question on Dixon particularly, so I think what's very evident is that the scale down that's happening from the demand side, and some of these companies had remember just recently enhanced capacities, augmented capacities, and all of that is yet not kind of paid for itself as yet. The cycle takes about 3.5 years for all these incremental capacities that they've added. And suddenly you have this specter of demand contraction, which is staring at your face, and it's a significant change. Now, with Turkey going down, there could be some benefits which will eventually accrue to some of these companies because a lot of order routing which was happening through there might end up finding its way to India. But apart from that respite, which is again a short-term blip, I think there is stress in this sector, Nigel. So what's happening is all high flying, as you said, the darlings and the poster boys of the years or months have actually started losing out on P multiples, and that could particularly still continue. I think it's still reasonably high. It's towards a higher band in terms of what you would like to pay in a market like this. So stay away from some names. And if you're invested, at some point you should have the gumption to at least book out and probably wait for a better opportunity to buy.
Prakash, since you are expecting it, I am going to ask you about United Breweries and what you made of those numbers. Volume growth of just 4%. The street is clearly very disappointed. And also, if you could just give us this backstory about what's happening with the United Breweries business in Tamil Nadu and Andhra Pradesh. There is some restructuring going on that's impacting their volumes and performance. What exactly is the issue over there, if you know?
Yeah, hi, Rima. So lots of questions rolled in one. Let me first specifically address what my interpretation of the numbers is. So, this whole thing of volume growth contracting for the market leader, fortunately, is not something which is percolating for the whole sector. So what's happening is UBL is consciously tried itself to morph into the Heineken way of life. From what it has been used to. And it's now evident in the kind of operations that they do. They're relying much more on technology. They're relying on just-in-time inventory for distribution and all of that. And some of these states that we have, and you know that liquor is a very state-specific business of sorts. Every state has its own set of rules and policies and dynamics that come into picture. And what's worked for them in some of the larger markets like Maharashtra, Goa, Karnataka, which are beer intensive, hasn't probably worked for them in these other markets. And the restructuring that you're talking about is exactly to align it with the new management thought which is there. So that's one thing. It'll take some time for it to reset and get right. The other thing that's very clearly evident in this space, and we saw the Sula numbers, we saw how Sula is reacting to the numbers today. This entire space, discretionary consumption, is probably going to be one pocket which will be far more resilient when you start seeing the impact of demand contraction. Now, the demand contraction in rural markets has been evident. It's still struggling. So that's exactly what you see in the FMCG names. But this is one segment which will continue to do well, irrespective of whether it's a Friday or it's any other weekday. And especially newer markets like UP and all, I think are going to be extremely significant in terms of an impact for most beer companies, liquor companies, because it's been a great liquor hub of sorts because the distilleries being based there, the sugar mills being based there. But now it's kind of modernizing itself and industrializing itself. So those kind of vectors are what you need to look at. And one of companies that Nigel knows of, which I've spoken to about, Som Distilleries, they've actually done so well in Karnataka, which is the Kingfisher hub. And they're number 2 out there, as the press release mentioned yesterday. So there's so much happening in terms of dynamics that this is going to be an interesting space where UBL might end up being a loser in market share and on the stock price.
As of now, it's clearly a laggard today. Sula, on the other hand, is holding up in the green. It's up close to about 2.5%, but it slipped 5% from the day's high. It was a steady performance, 15% type of revenue and profit growth, but the company indicated that it's the premiumization which is driving the top line. The volume growth for the company was 8 to 10% lower than the value growth. That's Sula for you now at 409. Get into a short break. Prakash, do stay on. And we would like to thank our viewers once again. We've beaten all competition on Budget Day with an 89.8% viewership throughout the day. We've also emerged as the leader with an
Welcome back. You're tuned in to Closing Bell. Well, we have VST Tillers. The numbers flash for you on the screen. On the top line, it's a very mild growth, only 2.5% odd. The problem is in terms of margins. Well, that's contracted because you have the EBITDA number that's down by close to around 23%. I think going ahead, the street would like to know what are the margins going to look like. For Q3, everyone's factored in that there's going to be a compression. So that'll be interesting to see how things evolve out there and whether or not the tractor sales, they have a big capacity of close to around 30,000 units. It's not even been reaching 10, 12,000 units odd. So we'll have to wait to see whether or not they can ramp up on that front. But let's talk about a couple of stocks. Voltas, well, that stock was under pressure earlier today, but that's recovered from the low point of the day. Maybe, in fact, part of the bad news was already in the price. Vaista joins us to tell us what's working for the stock. Vaista.
Hi, Nigel. Well, you're absolutely right. The results were bad. It was a weak quarter for Voltas. In fact, the revenues, though, jumped by 12% on a year-on-year basis, but the margins have dipped to 3.8% versus 8.8% in the same quarter of last year. And due to 137 crore of provisions made on overseas project, the bottom line had turned loss-making in this quarter. Now, moving on to Voltas' biggest segment, which is the unitary cooling products division. Given that Q3 is anyways a lean season for the cooling products division, the revenues grew by meager 11%, but this is to be compared with its peer Blue Star, which grew aggressively by 15%. That's point number one. Also, there was a fall in the UCP segment profitability by 13% on a year-on-year basis in the past quarter. Also, the room AC market share has seen a fall in this quarter and has come in to 22.5%. Which means a fall of 30 basis points on a quarter-on-quarter basis. And the fourth is the electromechanical projects and services segment, which is wherein the company has booked provisions and hence the segment has turned loss-making in this quarter of 46 crores. Well, Macquarie has a neutral rating on the stock with a target price of 867. But now, since the results are out, what one should be pondering upon is whether the street shall forgive what has been done and look at the long-term prospects of this Tata Group company. Well, only time can tell that. But what we know as of now is that the stock has already recovered from its lows and is already up by 3% in today's trading session. Well, also Voltas is just about 15% away from its 52-week low, while its peer Blue Star is just about 1% away from its 52-week high. So valuations are definitely a comfort for Voltas versus its peers as of now. Back to you.
Thanks a lot for that, Vaista, for joining and giving us a quick update. Prakash, what do you make of it? The street seems to be looking ahead. They are like, that's fine. You know, margins were under pressure, some market share loss, but they want to look ahead. And it's got solid parentage as well. Your view on the stock?
So, Nigel, I think if you look at the static parameters or factors that define this company, they've always been very good, very strong. But on a seasonality basis, if you see what's happened in the quarter gone by, is likely to persist as a trend in terms of the input cost, because all of these companies had actually booked components and largely metals and sheets at very high costs. And till they exhaust that, the cost element is always going to be impacting margins. So even if you have a revenue build-up on some of the UCP segments, it's not going to be adequate, or it's not going to be enough. The quarter coming in terms of the first financial year quarter, which is April, May, June, I think is going to be the most promising for them. And if you were to buy, you wait for a little bit of a softness thanks to this current quarter, and then probably look at it. But I'm sure you could still get some value off from where it is at these 850 zones.
Well, Prakash, that completes the triumvirate of the sectors that we spoke about today. We spoke about Daru, we spoke about Dawa, and now you've spoken about Hawa as well. But, just keeping an eye out on a bunch of other stocks, Safari Industries has seen a big spike. In fact, it's up around 7% odd. Then we've had a big move on Akzo Nobel as well. The margins expanded out there. So, everyone's eyeing increased market share coming in from Dulux, the premium range. And one stock which is used to unusual moves is BF Investments, locked in upper circuit today. In fact, it's been a big mover this week. This week itself, the stock is up 64%. A similar kind of move took place on the stock at the start of this year when the board was considering a meeting over delisting, and that didn't happen because of some issues with regards to a promoter having sold about 6 months before that. But again, now, without any sort of reason, there's a big move on BF Investments. Usually, BF Investments and BF Utilities move when, there's some word taking place on the Nandi Infra in Karnataka, etc. Not sure whether you track this space. What are your thoughts? What explains this unusual move here?
So, Mangalam, I'm pretty clueless on this particular move. But as you rightly said, it is always smartened up and sparkled when there is some anticipation on a resolution, a long-standing dispute on this particular infrastructure piece between Mysore and Bangalore. But, the value that it could generate now, even if BF Utilities things get clear and they could do something about it in terms of execution, I doubt it's going to be of such great import. So this is happening. This move is probably happening because of some corporate restructuring that's in the offing. And I'm not aware of that. So I would definitely stay away from this.
Another big mover over the last 2 days has been Campus Activewear. The stock is up 5.5% today. Yesterday as well, it was up a similar amount. It's corrected a fair bit from its 52-week high, I think close to about 40%. And CLSA, remember, had come out with a note where they're now saying the stock is attractive post the correction, and they had a target price of 470. The note came out yesterday, but the stock continues to see a lot of buying interest. Yesterday and today, it's gained close to about 10%. Prakash, thank you very much for joining in. Another stock that we want to talk about and apprise our viewers is M&M. It came out with their numbers. Sonia joins in with the details. Sonia.
Well, thanks a lot for that. So, the numbers were quite strong actually on the operational side. The margins have picked up after 3-4 quarters of just being in that 11.5% range in terms of margins. This time around, the margins have gone up 130 basis points year on year, coming in at 13%. However, there was an exceptional loss of 629 crores which hit the bottom line this time, and hence the profits were below what the street was estimating. But it was a strong growth. The revenue growth came in at over 40%. Both the autos and the tractor segment have done very well, and core EBITDA went up almost 56%. If you look at the main tractor business, right, over there, the EBIT margin has gone up to 16.6% compared to 16.2% last quarter, although on a year-on-year basis, there's been a bit of a fall. But if you look at the auto business, the EBIT margin has actually doubled this time around to 6.7% versus 3.5% same time last year. And the agri-business market share has also gone up 160 basis points year on year. The management commentary was very strong for M&M. They said that the farm equipment industry is expected to grow 10% in FY24. They've also attained 20.6% market share in the SUV segment, and there's a strong booking pipeline of 2.66 lakh open bookings that they're seeing because of a very good response to their SUV segment. So all in all, good set of numbers, but the stock has rallied substantially over the past 1 year, so just seeing a bit of consolidation at the moment. Back to you.
All right, Sonia, thanks a lot for that. Consolidation for the moment, but a big mover over the last few months. In fact, one of the big beneficiaries of this big move have been our next guests. We have Charandeep Singh as well as Varun Daga, who are the co-founders and fund managers at Giri Capital. Gentlemen, thank you so much for joining in. And as Sonia spoke about M&M, I was looking at your portfolio. The highest weightage in your portfolio is on Mahindra and Mahindra. What have you guys made of these numbers? And With this kind of up move that we've seen already, how much of this do you think is baked in the price, and what's the way forward? Charan, go ahead.
Hi. Hi, good afternoon to you and all the viewers of CNBC. Thanks for having us on the show. And, as to your question on Mahindra and Mahindra, hard to say how much is baked in. I think our thesis here was and always that there is an SUVization trend in India. If you look at what the Indian consumers become more demanding, they have more disposable income. They don't really want entry-level products anymore. And we are seeing this across most categories. There's premiumization everywhere as GDP levels go up and income levels go up. So similarly, people would rather not buy a car, right? They'd rather buy a car which gives them a good experience, which is why you're seeing so much success with models of Mahindra, models like the Tata Nexon. People want to try new things. It's the human race. So Mahindra and Mahindra has some really nice, neat models lined up. And they've been ahead of the curve in catching the whole SUVization trend. And the Indian car market, if you've seen for the last 7 or 8 years, SUVs have outstripped the growth of the overall car market, and this trend continues. And M&M, being sweetly positioned, is a good beneficiary. This is the kind of market where things get priced in quickly, so you're probably right. In the near term, maybe there's not much to go, but would we continue to hold a stock like this? We would not sell it. We would continue to hold it. And this is something we would do so until these trends continue to be in place. As long as they continue to be innovative and sell more cars, there is no reason to sell the stock. Again, this is our own personal opinion and not to be construed as advice that we are handing out.
Well, we take that disclaimer on board as well, Charandeep, and good to speak to you, Charandeep, as well as Varun. What about Zomato? There's a debate that's going on all through the week. I think it was part of your portfolio, but I don't think it's there right now. If you could tell us whether or not you'll have lightened the position out there or exited, or you'll still hold Zomato. Just wanted some clarification out there.
Yes, so I can take that. So we do not, we do like Zomato, but we do not hold it in the portfolio as of now. I think the call which we are taking, we really feel that the bottom is probably made, but the call which we are taking on the overall market is that you want to see a lot more execution, because I think it's very clear that the market is not rewarding anything which is in the
Varun,
future.
just want to clarify, y'all don't have it right now, but y'all had it, right, Zomato? It was part of the portfolio earlier.
It used to be a part of it.
And now it's not part of it. Go ahead, you were making a point.
Correct. So, what I was trying to say is that, it's very clear that the market is telling us that, you want to be with something where execution is in play and where we are not, giving something, 2-year, 3-year, 4-year forward, multiple. So, I think one needs to see what happens in terms of demand scenario. We also saw, demand scenario weakening over the last quarter. So we are keeping an eye on it. Let's see. But we are also wearing the risk management hat. So I think for us, it's very important to protect capital. And the idea is that, we should not lose money, once we buy the stock. So, I mean, we've managed to protect capital. We did not lose money in Zomato, and that's what's important for us. And if things turn around, if we see better numbers, we're always happy to get back.
Charandeep, another space where we can see some difference in your portfolio is on Blue Dart. It was a part of your portfolio earlier. Now we can't see it. And the other one is Bajaj Finance. Did you look to exit these two stocks? If yes, what was the thinking?
Yeah, so thanks for that question. So I must tell you that, I'll try to answer that question with some greater context. Blue Dart is still part of our portfolio, although it's a little smaller in our portfolio than it was. Bajaj Finance is no longer in our portfolio because we've replaced it with some other financial services stocks. But where, one point that I'd like to make is, where we are incrementally seeing a lot of opportunity across our portfolio and across the market in general. If you notice our portfolio, almost 8 to 10 stocks are either in manufacturing, EPC, infrastructure, or capital goods. So a large part of our portfolio weightage, if you look at those four segments combined, is really moving in that direction and has been for the last 1 year. So you will see names like gearbox manufacturers like Elecon Engineering, you'll see names like ABB, you will see names like RHI Magnesita, and that's where we're really seeing the action in the economy. And I mean, this was of course corroborated by the budget, where you've seen so much more spent towards building out the nation. We also believe that this will be followed in the next few years by building out of factories as Make in India plays out. So I think you will, this is where our portfolio really is going, whether it's a power producer, whether it's a power ancillary, whether it's a steel ancillary, this is really our focus at present.
Right. We take that point. Charan, earlier you stayed away from IT for a long time. Now, after the correction that we've seen and maybe the belief that there might not be a big recession in the US, instead there would at best be a soft landing as things, progress from here. IT could be one of those spaces which could benefit from low valuations and perhaps not as bad a problem on the demand front. Would you concur with that view, and maybe does that tempt you to nibble into these spaces?
No, I think you're right. I mean, there is definitely a temptation to look at IT. It's such a large sector like financial services.
Right.
So we are very underweighted. But the way we look at businesses is we need to see a combination of many things. We need to see a combination of earnings acceleration. We need earnings growth, which is significantly above the average earnings growth of our portfolio. And of course, then we also need to see a valuation that leaves enough room for upside. So I think it's a question of IRR. There's nothing wrong with the companies. It's just a question of how much money we feel we can make over the next few years. That's where we would be at on IT.
Okay, all right, gentlemen, final question before we let you go. Getting into 2023, the consensus theme was banks and financials. Some have performed, some haven't. Now, from your portfolio itself, I wanted your view. I think on SBI, either you'll have lightened your position or the weightage has come down for some reason. So have you cut some weight on SBI? And the other two names, Axis and Bajaj Finance, have you all exited there as well? So SBI, Axis and Bajaj Finance. Go ahead.
So, I can take that. We have, rebalanced. I would say we still like Axis and SBI, but we've rebalanced into newer positions like 5-Star and other financials like IFL1. So I think what we do is, because there are so many names in financials to choose from, and now if you see, the universe has just gotten wider with small finance banks and microfinance lenders. Your PSUs have also come up, So you have a lot to choose from, and what we try to do is just rebalance to where the earnings acceleration will be there and the valuations are within our comfort zone. And also, we don't want to be in stuff which is so well discovered and everything is baked in. So there are places where we feel that a lot of it is already in the price. We would probably lighten up and exit and move to newer areas on stocks where we could make quicker returns and could hold on for a longer period of time.
Charandeep, Varun, thank you very much for joining in. We need to cut across to the Finance Minister replying to the questions in the Parliament related to the Union Budget.
In China has also added a dimension which we couldn't have anticipated. So that led to the rise in international commodity prices. Also the vagaries of weather, extreme weather conditions, also triggered off food inflation, not just in India, but in very many other countries. So, more than what the monsoon vagaries bring to India almost every year since recorded history, we had other external vagaries also affecting us, particularly in the food area. Several preemptive measures were taken up by the government, and also the monetary policy decisions by the RBI had led to a sequence of measures being taken. And therefore, by November, December of 2022, we were able to return to the realm of the tolerance band which the RBI defines. And therefore, the CPI, the Consumer Price Index, came down to the below 6% level and therefore was within the tolerance band. Despite all this, sir, the Indian economy is still the fastest growing major economy and shall continue to be so even in 23-24. So since the pandemic, when the economy dipped by -23, our efforts to recover the economy has been through the capex route, capital expenditure route from the government side. And this, because it has great multiplier effect, enables to have in situ jobs created where the projects of the public expenditure are being spent and the projects are being made to rise. So that immediately in situ creates a lot of jobs and therefore triggers better income and therefore triggers better consumption. This is a well-established route in terms of multiplier for capital expenditure, as different from the route which is asserted by economists when you give money in the hands of the people, where the multiplier is far lesser than a rupee spent, is far lesser than that rupee spent.
Okay, let's slip into a very short break. We'll keep cutting into excerpts from the finance minister speaking in the parliament. But right now, I need to get into a break. We'll come back and tell you what dealing rooms are saying in our segment, D Street Chatter. We'll also get you some technical calls.
Welcome back. Not much change in the indices from where we started. You're watching us here on Closing Bell live from the Motilal Oswal newsroom, coming to you. We're looking at a bunch of these urban consumption names doing extremely well over the last few minutes. We have Ethos, which has moved to the high point of trade. Phoenix Mills is doing extremely well. Metro, the shoemaker, also Metro Brands, has moved to the high point of trade. Of course, Rima alluded to Campus Activewear, which has been doing well for the last couple of days, thanks to the CLSA note, which found value after a 40% correction on that stock itself. So while individual stocks are buzzing around, it's time for our special and the most fun D Street Chatter segment. Nimesh joins in. Nimesh, what have the brokers been talking about? I mean, it's so range bound.
It's range bound. It's actually dull as well. The flows have become tepid. There is not much activity as well. I guess a lot of the fund managers, the active investors, are pretty busy in the conferences as well. So I guess that also speaks in terms of volumes. Again, mixed day in terms of FI flows are concerned. Again, financials are well bedded. Within financials, for a change today, there is a bit of interest in the NBFC space. Okay. So both the Bajaj funds are well bed. There are a couple of interest in the other housing finance companies as well. So that's the overall feedback from the dealing rooms. I guess the sector which is under pressure is metals, largely on back of weak quarterly earnings throughout, whether it's non-ferrous or ferrous. So that's putting pressure on the metal stocks. Broadly, it's been in that range. I think 17,800 is a very important level technically. So that's been protected so far. But not much activity, whether it's JIs or the FIs in today's trade. All right, not much activity at the index level or flows level, etc. They are mixed, but individual stocks, a lot is happening as we speak, and I'm sure you have got some buzz as well. Yes, so the first stock on my list today is Paytm. Everybody's been talking about the big large block, 3% equity changing hands. It was part of my chatter as well for the last couple of days. I believe one of the biggest strategic investor of Paytm has sold a big chunk in today's block, and one of the large FI was an anchor investor. So the disclosures will be important in today's trade on who sold and who bought as far as Paytm is concerned. The second stock is Pharma. Again, a stock where there was a lot of excitement to start with when the demerger happened, but that's been a big underperformer. But for the last 2 days, the volume has been quite high. Even in today's trade, the last one I checked, more than 1.7 crore shares were traded. So the delivery, it's marked by delivery as well, and I believe large part of the selling from a leading FI seems to be over in Pharma. So that's the overall feedback. The third stock is Zomato. Again, inline quarter for Zomato, and that stock has been in an up move for the last many days. Now there is a buzz or indication of a large block coming in Zomato as well very soon. So that's something to track in Zomato going forward. And the last stock is TVS Motors. Out of the blue, that stock is buzzing in trade, largely on FI flows and FI days. So the delivery volumes are going to be quite high, and there is a bit of interest back at these levels in TVS, backed by a very large flow at a leading FI desk.
Oh, thank you very much for that. Nimesh, you had alerted about an impending block deal in Paytm, and that's come through today. And even on Piramal Pharma, it's in the red, down less than 1%, and it's recovered 7.5% from the day's low. Mitesh is back with us. He's going to tell us a few BTST trading calls. Mitesh, before that, at the index level, nothing really has happened. What do you think can help us break out of this trading range? And then, of course, your trading calls.
So on the index, as you rightly said, nothing has happened, and we still don't have a signal of that happening. So hold your horses on the index. On the stock side, I think, BTST on Tata Motors, discover we have some core ratio spreads on the positive side. That's BTST with the stop at about 441, and look for targets of roughly around 455. And overall reality is the other one which I like. That's a BTST as well. Keep a stop below 849 and target of around 875.
Okay, all right. Thanks for that, Mitesh. Well, we'll slip into a short break. You come back, final few minutes of this week's trading action. You stay with us.
Welcome back. You're watching us here on Closing Bell. We are seeing some moves in the cement pack. Shree Cement has moved higher. India Cements too from the F&O space has moved higher, along with Ramco Cement. So we'll just keep an eye out on these names. We have Dipan Mehta with us from Elixir Equities joins in. Dipan, you've been talking about how there was a blowout performance coming in from Indian hotels in terms of numbers. The stock has rallied quite a bit, mildly off highs as well. Dipan, your thoughts on the Indian hotels and the entire urban consumption space?
Yeah, Mangalam, thank you for having me on your show. I think we're very positive on the urban consumption space, and hospitality especially ranks high above over there. And Indian Hotel is a very dominant player in that space, and they are present across various brands and across various price points, rapidly expanding capacity and focusing on reducing debt and improving its return ratios. So optically, the P ratio appears to be high, but considering the growth that can happen over the next 2-3 years or so, I think this stock can outperform for a long period of time.
Dipan, any thoughts on some of these mid-cap companies where we have seen big moves on the back of numbers? So, for instance, Force Motors is on the way down. That's lost 6.5%. Sirma SGS has gained 6.5%, 5.5% on the back of numbers. Akzo Nobel, Sula, Alchem Laboratories reported numbers, and there you are seeing a bit of a gain. MTAR Tech, today we had a chat with the management and they upped the revenue guidance for the full year. Any of these mid-caps which caught your attention in the earnings reported today?
See, the MTR and SGS are expensive stocks per se, but they are interesting businesses. They like to track them and invest at a time when they are available at reasonable valuations. Alchem has been a bit of a disappointment. I haven't seen the numbers today, but broadly last several quarters, the US has not picked up as well as we expected. And Force Motors is per se, the earnings are very volatile and they're a niche player in the auto industry. And when you come to auto, you have so much of choice. I mean, we saw M&M's numbers were pretty decent, and Maruti also earlier came out with a good set of numbers. So I'd like to focus on M&M, Maruti, and maybe Eicher Motors rather than Force Motors at this point of time.
Okay, all right. Thanks, Dipan. Apologies, it's been a short chat today, but always good to hear your thoughts. Wishing you a good weekend ahead. Well, time to start recapping the markets. It was a bit of a down day, but fair to say that we are seeing a bit of a buy on dips that's playing out. It's 17,750, 17,800 odd. That seems to be the entry spot. In terms of stocks that are losing out, the MSCI rejig, well, that's something that hurt a couple of stocks. So you had weight cuts on Adani Enterprises as well as HCL Tech. Both of them were the top losers. Giving them company on the downside was Tata Steel, Coal India, both of them under some pressure. And the problem today was a couple of those heavyweights like Reliance and ITC, both of them ended with cuts. On the flip side, you had select auto names that did do well. So Tata Motors and Hero MotoCorp, both of them were up between 1 to around 2%. UPL and Cipla as well went home with gains of close to under 1.5%. In terms of result reactions, Lupin, well, it did see a sharp knock in trade. Auto Pharma on the flip side, though, did pretty well. While Voltas started in the red, but that stock recovered. Maybe part of the bad news is in the price. United Breweries, though, didn't see any gains in today's trading session. In fact, Rima went home with a cut of around 4%.
Absolutely. So United Breweries was down 4.5%. Zomato ends with a cut of close to about 2%. Paytm was a big loser. That's down 8-odd%. On the gaining side, you had Aurobindo Pharma. That was up 6%. Voltas, Sula, Sirma SGH, CG Power, where the MSCI benefit is there and there will be inflows. CG Power ends with a gain of close to about 5.5%. But there goes the bell. We wrap up Friday, we wrap up the week. It's 17,843 on the Nifty, a minor downtick of close to about 50 points, 0.2-0.3% gone on the benchmark indices. It wraps up another quiet trading session for our markets, range sideways. For the week as well, I don't think the Nifty has done too much, pretty much flat. The mid-caps, though, have outperformed for the day, up 0.2%. The advanced decline ratio also in favor of the gaining side. And for the week, the mid-cap index has gained more than about 2%. The question is, Nigel, what is going to help us break out of this range, right? Most of the cues that we were looking forward to, the budget, the FOMC, earnings too, bulk of the earnings is behind us. So what's going to be the trigger that will help us break out of this range? That's going to be the big thing, right?
I'll tell you what, Rima, the bulls wouldn't mind a time-wise correction, but they don't want to see a price-wise correction, right? You're hoping that we don't go and visit the budget lows of around 17,350. But all that and more we'll discuss in the next week itself. For the time being, though, we'll wrap up on this edition of Closing Bell. Sonia will be joining in with Vallabh Bhansali in our Friday special, Smart Money. You don't want to miss this.